Welcome to the 6th event of the speaker series, Social Policy Unpacked, Exploring Pathways for Green and Digital Transitions. The series is co-organized by DG Employment, Social Affairs and Inclusion and the ZOE Institute for Future Fit Economies, and it's funded under the Horizon Europe program. My name is Christoph Gran. I'm the co-founder of the ZOE Institute, which is a think and do tank working at the interface of science and policy, and we're specialized on co-creation, new economic thinking, and these kind of things. And with this speaker series, we want to invite you, the policymakers in the room, but also the wider public to think outside the box, be inspired with new ideas, and to make sure that this transition towards, that the Green Deal, the transition towards living within planetary boundaries is going to be successful and fair. We have 12 online seminars in this series. It started in December 22 and it will go until June 23. We will have the next session on the 2nd of May. It will be a Tuesday, so it's the one and only Tuesday. Usually we do that on Wednesdays, but that one will be on Tuesday, 2nd of May, on the risks of digital technology and AI in public administration, with Professor Karen Young from the University of Birmingham. There will be more events to come, so please follow us on LinkedIn, Twitter, or we will advertise it. And if you're registered for this event, we will of course come up with the next events. We will also send you the recordings and the slidings of this event. And what have we done so far? A lot of things. And one topic that was very interesting, and I think with most participants, was the question of we had with Anna Kut on the way and how and why should basic needs be met and why they constitute a good life. And one of these basic needs definitely or undeniably is housing. And housing policy and housing welfare is often utilized at the national level, but comparative research at the EU level also plays an important role in understanding the bigger picture, namely understanding the social and financial dimensions and challenges of housing. Only then it's possible to take the next steps towards a fair and green transition and what housing means for such a transition. I'm thrilled to have Professor Sebastian Kohl with us today. Sebastian Kohl is Professor of Sociology at Berlin's Free University at the JFK Institute. His previous work included being a senior researcher at the Max Planck Institute for the Study of Societies in Köln and the Institute for Housing and Urban Research in Uppsala, as well as his Kennedy Fellowship at the Center for European Studies at Harvard. His research focuses on the political economy of housing in historical comparative perspectives. Sebastian, I'm very honored to have you here. Please, the stage is yours.
Yes, thank you, Christoph, and thanks for inviting me. In the chat, actually, before I start my presentation, I will share a couple of links to the data sources that I will use, and I invite you to use these interactive graphs a little bit to explore some of the content that I will talk about also today. So in the talk, I would like to give you a brief introduction into broad trends that characterize housing in Europe in a historical comparative perspective. I will then point to some of the challenges associated with what has been called financialization of housing by describing how the financialization 1.0 moved to a financialization 2.0, that is how the explosion of private mortgage debt up until the global financial crisis of 2008 was then shifted into this renewed interest of big institutional investors in rental housing in the major European cities. I will mention how this can be problematic and how also policy solutions, even at the European level, could be a solution to some of these problems. Let me say also that part of this presentation or a lot of this presentation is actually joint work. I draw on a joint report with Daniela Gabor that we did for the European Greens. That was called The Home is My Asset Class. You find the link in the chat here. Other work is also jointly with co-authors, and I acknowledge this in the footers of this presentation. So let's turn to some basic European housing trends. So here's a complex graph that you can also reconstruct with the first link that I shared with you in the chat, which displays the long-run movement towards homeowner societies in European countries. And this is the case with different trajectories for all of the countries. So we have the Baltic states here, for instance, characterized by this Soviet history U-shaped curve. We have the Southern European and Northern European countries, Anglophone countries here on top. Clearly beyond the 50% home ownership rate mark, and it's only actually the German-speaking countries below here, here the East Germans on the very bottom, who still have majorities of tenants. This is not to say that European cities are dominated by homeowners. Even a city like Paris or also London, for instance, still have almost half of the population living in urban tenancy. And we'll see also why this is important. So homeownership developed at the cost of private rental, but also social housing. So the second link that I shared with you again in the chat tells you the long-run history of social housing rates as percent of the total housing stock. And it is a story of a rise and decline. As you can see, it started at the beginning of the 20th century, got a certain push after the First and particularly the Second World War in almost all of these European countries. And by about the 1970s, the decline started. The decline was a little bit more pronounced in some countries than in others. The decline champion of social housing is Germany here, for instance, where in the very top, you had up to 20% and more social housing rates. And currently we are down to, I think it is about 4% social housing. But this history has obviously been even more pronounced in the Eastern European countries with the privatization of the formerly state or cooperative housing stock. Also in Scandinavian countries, there is a certain resilience, but also a decline in the last years. In short, the social rental sector has basically been replaced by home ownership. And this has also been the case for the third segment of housing markets in Europe, which is the private rental sector. And this has really lost a lot of percentage points over time, but there was a reversal, a comeback of rental markets. Some scholars speak about the generation rent that some of you in the audience may be participating in, so do I actually. And here you see the rise of this generation rent post the global financial crisis of 2008. There was a gain of this rental market sector in percentage points of, I mean, in the most extreme case here of Ireland, up to almost 20% among the poorer households. So an increasing share then again of the population, particularly in the countries that suffered most in the global financial crisis, then living in tenancy. This would even be more pronounced than in the cities. So this related to the different tenures. Let's look at the general trend of housing policies regarding these tenures, and let's continue here with the private rental market sector. This is also an open database here constructed by Holodilian based on an approach of Weber 2017, which tries to measure the extent to which the private rental market is regulated in terms of first rent price control, then the security a tenant has to not be evicted at will, and finally housing rationing measures such as forcing landlords to accept certain tenants, for instance. These are all composite indices that are based on our coding of historical rental market legislation, which started by about 1914, when rent controls were first used in at least modern history. There's a much older history. You can start in ancient China if you want. So first used in order to protect the families of the soldiers in the fields. Ever since, the two world wars, again, have marked the most extreme forms of tendency of price control, for instance, where you had almost price freezes here. Ever since, it's a story of a liberalization of private rental markets. But as you can also see, differing by the different country groups here, divided by the different legal origins. So roughly speaking, you have the most deregulated private rental markets in the Anglophone common law countries, and the much more regulated market in the Scandinavian countries, with the other jurisdictions falling a little bit in between. Tenancy security is existent in most countries, at least to a certain extent. The very extreme rationing has almost been abolished, but has also seen a comeback. So this is actually not noted in the data right now, but while you all heard about these initiatives in Spanish provinces, for instance, in Berlin, also there's been a comeback also of more severe forms of price control than is depicted actually in this chart. But the general trend has been a liberalization. So for landlords, renting out has become more attractive. For tenants, it has become less attractive. But let's look at the other segment of the housing market, the home ownership sector. Here we see the reverse trend. So again, we went to countries' tax codes for this article here and coded to what extent the tax code privileges homeowners in terms of exempting them, for instance, from imputed rents or from making it possible to deduct mortgage costs from income taxes and so on. Again, we measured the presence of these different measures. We did not count sort of the amounts of subsidies flowing into these measures. This would be really complicated. We summarized this information again in an index, and let's take a look mostly at this tax neutrality index, which has higher values once a tax code privileges homeowners more than tenants. And as you can see, up until the global financial crisis at least, this declining story of rent control is paralleled by an increase of the tax code preference in favor of homeowners. And as I said, there's been this slight reversal also in the last years with this decline. So home ownership dream supported by the government was not really trending after 2008. And this rise here then of the rent control legislation. So this basically regarded the different 10 years housing policies. Let's take a look at housing conditions. Two conditions are most important. How much do you pay, and basically how much do you get in terms of quality? Here is a very interesting research by some Dutch colleagues around Eichels, Korevaar, and Lindenthal, who for these very few cities were able to collect data on wages and rents across the last even 500 plus years. And as you can see, so this is the wage index over the rent index, which basically means when this curve increases, affordability of rents relative to your wages is getting better. Yeah, and the title of that paper is Affordability Revolution. So what you can see is that in this 20th century, housing in terms of wages over rent became much more accessible, up to 5-6 times more accessible. But, and let's focus now only on the last 2 or 3 decades, you can also see that there has been a notable decline also. First of all, starting here around the 70s, and then also for the most recent decade. And when you turn to Eurostat data, also on overburden by rental cost, for instance, you can also see this story confirmed. This is particularly the case in the superstar cities, where also buying has become more and more expensive. So I draw on work by Hilber here, for instance. We documented this for many more cities in the long run, since 1870 even, in a companion paper. This basically shows what has been called the superstar city phenomenon. The big cities, the major metropoles in the respective countries get decoupled from their smaller cities and hinterlands. And within the cities, also prices decouple from rents. So it gets more and more difficult then, obviously, relative to your income, to be able to afford housing in these big cities. And this is a graph that we repeated also for many other European countries. Last but not least, the quality of housing can be measured also by how much square meters or square feet you get per person, or how many rooms. And if you have less than a room per adult person, then this is called overcrowding. And this is the percentage of overcrowded households in European countries, which is declining in Eastern Europe, but on average in Southern and Western Europe, rather on the rise. And this particularly in cities. And this is, I mean, historically quite exceptional, given that across this affordability revolution century, there has been an unprecedented rise also of average square meters and rooms per person. So this has been the reversal of a very long run trend that we are seeing here. All right, so this was just to bring you on the page here of what is going on in terms of housing markets in European countries. Let's turn now to an important ingredient of housing market, which is housing finance. The literature has characterized what has been going on in terms of housing finance in European countries as the great mortgaging. So across the last 30-40 years, with the liberalization of capital markets, and this is where the European Union also comes in with projects such as the single market or now the capital market union. Liberalization also is in terms of government regulation, facilitating cross-national mortgage lending, but also facilitating sort of unregulated interest rates in mortgage markets. And with this liberalization, then there has been an explosion of mortgage credit here. It's household debt per GDP. Most of household debt is mortgage debt anyhow. And this has been happening across basically all countries. Scandinavians and Anglophone countries score particularly high. And this has been the case basically until the global financial crisis of 2008. Ever since, there's been a new development, and this growth of mortgage debt has also been accompanied by this house price boom that you've seen in the previous graph. So this, as a result, means that when you look at the composition of households by different tenures, Eurostat even, so this is really copied from Eurostat, as you can see, really has this new big category here of owners who are owning but with a mortgage. And you can see that in some of the Scandinavian countries, the Netherlands are the most extreme. Then more than 50% then of all households own their houses, but with a considerable mortgage, which in some cases is not even paid off. It's something that children inherit. So there's a culture of mortgage debt that has been developing around this basically new form of tenure, if you want. You could assume that this increase of private mortgage debt really solved the main problem, that is bringing people into housing and perhaps at best in their own sort of house. This is actually not the case, because we do see in the data that this extension of private mortgage debt was actually not accompanied by an extension of homeowner rates, nor by more new construction, right? So it was basically absorbed in the prices, you could say. And this is displayed in this little chart, which has the home ownership rates here at the bottom. On the Y scale, you see again this household debt per GDP. And so you would expect a linear relationship. If you have more accumulated debt in a society, you should also get more homeowners, but you see that at best there is a stagnation setting in with debt piling up, but no more homeowners added than to the stock. In the worst case, there's even decline of the home ownership rate while debt continues to be piling up. And this is not so different when we look at this a little bit more complex picture, but I promise this is the most complex it gets here, which shows again these debt levels per GDP on the x-axis in all of these charts. And now it shows the new construction, so how many units per 1,000 inhabitants are constructed every year. In the top years of the post-war reconstruction era, we were at 10 or more units by 1,000 population. Nowadays, this has, as you can see, declined. So the red dots is everything prior to the 1970s, and the bluish dots here show the years in each country post the 1970s. And you can see that it was possible to extend mortgage credit. So here in France, for instance, and to get more construction out of it. But there was a certain point, so it's a bit of an inverted U relationship, beyond which an addition of more mortgage debt did not lead to more or higher construction rates. So there has been this explosion of debt, but it didn't really produce new homeowners or more construction. This was this short version of the story of this wave of financialization 1.0, as it's also called, where the extension and the government-supported extension of mortgage-financed home ownership was a bit of the program of most countries. That was meant to be the program to replace the social housing construction machine that was in place after the Second World War. Let's move on then to the second stage, financialization 2.0, which has been coined by the economic geographers down here, and which refers then to the renewed interest of institutional investors, so that is pension funds, asset managers, insurance companies, what have you. So renewed appetite for urban real estate. Much of it is actually commercial real estate, but in the transaction data that you can also see on this third link that I shared in the chat, it's up to 10% also related to residential real estate, and it's located in the big cities. So we see this rise of institutional investors in real estate, which coincides also with them who had divested actually from real estate and related products as well the long 20th century, which coincides then with a renewed interest to increase these items in their portfolio. It coincides obviously also with this decline of the yield in safe assets, so government bonds, and the very long environment of historically low interest rates, where suddenly sort of safe assets in the big cities became an attractive investment item again for these investors. Also, I mean, given many other background conditions, such as the reurbanization trends in Western countries and so on. So what is problematic now about this second phase of financialization, and here we draw on the diverse set of often very local case studies conducted by economic geographers, again, is that, let's say, these are not necessarily the preferred landlords from a tenant perspectives, and they may have also adverse effects on the housing and neighborhood conditions. They may push processes such as gentrification, for instance. So what we did in our report, which is cited here, is, and this is now the third link that you can also explore, so look up your own city. What we did is that we gathered mostly privately owned data from Preqin here, which is a private data company that charges relatively high amounts of money for data which I think should be publicly available. So here perhaps one little policy request from the researchers' side of view would be, well, housing is such a public affair, why not make data about housing a little bit more accessible than this? So in any case, we got this data and tried to break down the number here on the left-hand side of big real estate, residential real estate deals made by institutional investors of the different kinds in the major European cities. You can also see this worldwide, but let's focus on Europe here. On the right-hand side, you also can see the volume, which is in billion, right? So this is really big money. Preqin doesn't even tell us precisely how big is big, but yeah, I guess it's big enough. And this is a trend that we can document then across the last 10 years in many of the European cities. We were surprised to see that some of the parts of the portfolios traded are actually also in the smaller cities. But there's definitely also this focus on the big cities, such that, yeah, this is an ongoing trend, the data here and in 2020. Okay, so this was a broad tableau about housing conditions in Europe, the inroads that institutional investors made in these markets over the recent decades, replacing this first wave of financialization with a second wave. And as a researcher, yeah, it is not, let's say, the most common thing for us to think about policy solutions. That's why I will just mention potential ideas that could be taken up, could also not be taken up, and leave it to the policymakers to decide. It is, I think, a fact that Europe has enormous requirements of investments in the housing stock, not just to sort of fill the shortages and solve the affordability problems that I documented, but also to make the housing stock climate neutral. So this is a reconstruction effort that I think in terms of sums invested is similar to the post-war reconstruction. So part of my recommendation would actually be to go back also to these historical moments when Europe had to reconstruct its housing stocks and to look a little bit and to learn from the institutions that existed back then. One of the institutions that actually had existed back then were private capital sources, and to make them work in favor of housing. So in the 1950s, for instance, the German government, let's say, announced that it would force the private insurers to invest at least 50% of their housing stock, of their accumulated asset in housing. And the mere announcement of this intention then led private insurers to invest even up to 80% of all of their 1950s assets in housing and also social housing. So already in the 1950s, there was a lot of private capital available. Nowadays, think about aging Europe with all of its pension funds, the third pillar institutions that have been growing even in sort of third pillar pension countries like Germany, there's a lot of potential to be had. The obvious problem here is to channel this money in a regulated way, taking into account the potentially adverse effects that economic geographers have documented for tenants, for instance, of institutional landlords. So one idea that we wrote about in the report was to specify a certain social taxonomy which would allow investments in housing under a certain, let's say, certificate, only if also certain, for instance, requirements regarding the living conditions of tenants living in the housing investment, so to speak, were fulfilled. A second idea that also draws on this experience of the post-war reconstruction is to come up with, yes, a huge European housing fund, which, I mean, could be used as a counter-cyclical tool, a little bit like a European unemployment insurance, perhaps, to bail out the business cycle, because construction is obviously a major component of the business cycle, but which could also second, the investments made by the nation states in Europe, and yeah, the European Investment Bank could be an institution perhaps to channel this money. And yes, why don't we take a look at the interesting post-war reconstruction institutions? Again, last but not least, so in countries like New Zealand, also Sweden lately, the central banks try to come up with, let's say, more fine-grained macroprudential tools in order to, let's say, allow a little bit of a more conservative mortgage lending, which goes to the users who really need the housing. So, for instance, a prohibition of taking out second home kind of mortgages, giving the need of primary mortgages, or also yeah, installing more conservative loan-to-value ratio for central banks. So these are just some ideas. Other countries have recurred to increasing rent controls, which I think can only be a temporary measure. Our research shows that this is not a long-term solution. Other countries, Canada, have started to restrict foreign investments into real estate. This is also becoming a policy trend that we are documenting currently in a working paper. But okay, this was just to perhaps open a little bit the room for potential ideas. I leave it here. Thank you for your attention.
Thank you for this very, very interesting input with a lot of almost shocking data, part of them. And it seems to be a very complex topic. And yeah, thanks for shedding light on this very complex topic. And maybe over to you, Aiste, for some first questions.
Yes, thank you very much. So I'll move forward with the Q&A session. If anyone has any other questions, as we move forward with the session, feel free to add them via Slido and we'll respond to them as we go. So the first question that we got would be, how is the increasing mortgage debt impacting people to transition to green housing? Does it impact people's capacity to invest in renovations, renewable energies, and etc.?
Yes, so I mean, all of this mortgage debt are obviously investments that have already been undertaken, right? So if you dispose of an asset that is already almost underwater, then it's not possible to sort of get another mortgage on this very asset and invest in green energy solutions. So yes, in a way, it's a big obstacle to sort of any kind of renewed investments. I mean, the private mortgage debt per GDP has risen to numbers that would make, let's say, the private sector in an economy fail the Maastricht criterion of joining the European or the Euro area. So it's beyond the 60% of debt per GDP that sort of public debt needs to sort of be in line with. This is a huge amount of indebtedness, which obviously makes it difficult to change the course of action.
But what would that mean for a green transition? I mean, we're having this very intense debate in Germany about the heating systems and a society that is potentially, or not potentially, that is overaged, let's say it, which have their houses on mortgage and cannot afford doing anything. How can policy deal with that?
Yes, so there are programs implemented by the German Investment Bank, the KfW, and the European Investment Bank could step in here. The question is also, we are talking here about housing in Europe, and the European Union does not have any sort of competencies or portfolio in the housing domain. So the green transition could be actually one way for the European Union to enter this housing debate by, for instance, tying certain subsidy programs for housing investment to certain criteria of sustainability of housing construction.
Maybe to stick with this topic for a second, because I think it's very interesting. I mean, suppose that would help making the green transition for homeowners. Would that also help tenants? I mean, those not having or not finding a good place to live?
Well, I mean, some of these programs could obviously add or target landlords. Right. So, I mean, yeah, we were talking about Germany, but there we have these 55% of households living in tenancy. There the target of any kind of investment would be the landlord, many of which are actually not these big investors, but also smaller ones. Similar programs could be used to tie mortgage lending to landlords to then a criteria of sustainability.
Thank you so much. Now we got another question that's a bit moving to another direction, but there's a question about if there's any research on cooperative, collaborative, or multi-owned housing in the context of financialization of housing, and where does it stand as a potential solution to curtail financialization of housing, and what research has been done on this, and what would you see as research gaps in this area?
Yeah, that's a good question. So from a quantitative point of view, this is a little bit difficult to answer, at least globally, because let's say these different cooperative multi-ownership forms of housing do not always figure in the sort of housing censuses that we use. I think an interesting example are Scandinavian cooperatives. So in countries like Sweden or Norway, we are talking about 20-30% of the households who live in a cooperative kind of arrangement, which is a legal form that came up in the 20th century as a bit of a public-minded anti-private home ownership form of living, and was actually liberalized, and if you want, also financialized, starting I think in 1968 in Denmark, and also then in the other Scandinavian countries. I mean, Bengt Turner is the classic who wrote about the effects of mortgage indebtedness that rose as a consequence of the fact that the members of these cooperatives in Sweden of the 1980s then did not only buy these very smallish sums for their membership shares, but basically started to pay condominium-like prices to enter these cooperatives, which nowadays, when you go to Stockholm, for instance, populate the city much as, I would say, condos in New York. So yeah, I think that would be a good point to start.
talking about this, in your input, you came to the point of overcrowding and its square meters per person. Maybe because it was very quick, maybe you could come back to this, because I think it's a very important point that when talking about the green transition, we usually have in mind that the square meters per person are rising, and we see this as a kind of a rebound effect. But now with your data, it seems like there is some overcrowding. Is that only for the private renting and the private ownership? How can you maybe elaborate on that a little bit more? That would be great.
Yeah, sure. So yeah, I mean, that's a phenomenon that occurs, let's say, more for tenants and more in the big cities, and more in areas with higher prices than elsewhere. It does not happen necessarily in Eastern European countries. And yes, it reverses this very long trend of increased living space that we can document. I mean, the Dutch scholars that I cited, they document it, I think, since as early as the 1900s, which was reversed, for instance, in the German context in the 2010s. And yeah, there are different drivers to this very long-run trend of rising living space, and as you pointed out, right, the rebound effect, or the fact that societies grow richer over time produces a very secular trend. Then there are also demographic reasons, obviously, more and more singletons composing households, for instance. I mean, from a climate sort of change perspective, you could also say that it's perhaps not too bad that this number starts to decline again a little bit. Because obviously this makes housing, let's say, more energy efficient in terms of use if you put more people together. The problem is obviously that this is not sort of a very ethical process, but there's a high inequality also involved in the distribution of housing space. This is actually a research project that we are conducting at the moment. And overcrowding, I mean, there's a host of also psychological literature that shows this, not just for housing, but also for prisons or hospitals. Overcrowding has also really adverse effects psychologically for children's performance at schools. Yeah.
Thank you. Yeah.
And to follow up with that, we have some questions about demographics of different groups and how increasing home ownership affected different groups of society. If you could comment if there's any evidence on effects of middle class, or how it affects different maybe vulnerable groups.
Yeah, so when it comes to home ownership and the decline of it, then this is basically a generational question. So there was this lucky generation, for instance, of the 1980s, 90s in countries like Great Britain, privatized council housing, parents moved into first-time home ownership, and then prices started to rise, right, producing more and more wealth even in strata of the population who previously did not necessarily pertain to the haves, so rather the have-nots. And now their children are basically unable to enter first-time home ownership. So there's this intergenerational inequality, obviously. Then research shows that to enter a house, you basically need an endowment from your parents in these high-priced cities. So without an inheritance or the backing of your parents, it becomes more and more difficult. The Irish context, I think, is one where you can see these phenomena really pronounced. You saw that also in the graphs. And part of this decline also of this affordability index is about wages, right? So, I mean, if your rents increase, or I mean, also the prices increase much more than the wages, then unaffordability increases. So there's a class component in accessing home ownership. Yeah, for those of you who are also in research and here in the European context, there is obviously the EU Silk data, so on the housing, living conditions in Europe that include a lot of also housing variables, some of them with problems, but also very informative. I mean, you can, as a researcher, access these kind of data also free of charge. So yeah, I encourage you to go for it.
And thinking of this income distribution and then the access to fair and accessible housing, and combining it with the first questions on ecological transition, how would you suggest research to use to accelerate the green transition and yeah, at this crossroad of accessibility and green impact?
Yes, so I mean, mentioning the survey, these kind of data could also be used, for instance, to look at the investment necessary for the green transition in the housing sector by the different income groups, right, or by the different tenure classes. And something that you discover when doing this is that, let's say, there's often most investment need in places where people are least prepared to basically conduct this investment, either because we are talking about old homeowners, or we are talking about poor tenants, where basically the tenants will never be able to produce the return that a landlord, for instance, would need in order to justify a certain housing investment. So these kind of micro data, which I must say I have not explored so far, but these kind of micro data allow to basically specify the social conditions of sort of a green transition in the housing stock.
So there's a lot to explore, I guess.
Yeah, but yeah, this is not something that I did primary research on.
Now we also have a few questions on like policy solutions. So first kind of part of a question would be, what role does financial sector play, and EU sustainable finance taxonomy? What role could it play to kind of help move towards more sustainable and more accessible housing? And second part of it, where does the social housing policy come in, and how does social housing policy could help like limit financialization and all these negative effects?
Yeah. Yeah, so I think policy examples from France currently and historically from Germany are interesting cases where governments basically create a framework in which private capital can construct and is allowed to construct new housing units, provided that, for instance, a certain percentage of these new units are in affordable housing. In that social, so this is what we one way to mobilize private capital and to make it useful for public purposes. In that report, we mentioned also a social taxonomy, which would basically certify certain asset classes as sort of socially legitimate if the investments comply with certain conditions. And there it's not just about treating your suppliers nicely, but also, for instance, making sure that the living conditions of your tenants are adequate. And I mean, these kinds of social taxonomy proposals do run the risk of being sort of socially greenwashed. Becoming too loose to be implemented. So there the idea would be to install some kind of supervision and regulatory supervision agency that would make sure that these conditions are really complied with.
And actually, we got another very interesting question. If actually move to the teleworking after the COVID would offer new opportunities to address housing shortages, and if there are any examples of retrofitting redundant office spaces into housing, and this way creating more housing stock and reducing shortage.
Yeah, so this is also something that I've primarily investigated. My sense is that the conversions are not as easy as sort of the question maybe suggested. So it's not the case that we now see entire New York office towers turned into modern condos. This also requires a certain investment. And yeah, I may alleviate the housing shortages in cities, but I mean, given the stickiness also of office employment despite COVID, I think that's not the one-time solution that that we can look for.
How about multi-generational households and the role of family, and we've had it before, the community housing approaches. Would that help?
It may help
force people to stay in the family, right?
Yeah, so I mean, these kind of proposals we also coded in our housing rationing index, right? And I think there is probably a reason for why these, let's say, strict interventions in the housing stock, making people live together in a certain way, have been abolished in those countries. Yeah, I mean, it may work here and there, but it's probably not the general solution. I mean, it has been circulating also in the discussion. Again, when you look at living space, most of the inequality is driven by the fact that the elderly population, once children moved out of the mostly houses, then they basically are under-occupying a large space, right? Mm-hmm. And then you have the young families who would need the space but don't have it. Yeah, with this price rent decoupling that I mentioned, and superstar cities decoupling from smaller cities, the hinterlands, it has often been, or it is often difficult for suburban homeowners to move from their single family suburban house into a central city kind of apartment. Because prices have just decoupled in these cities. So that has also, I think, slowed this process down a little bit of making the young generation take over the larger living spaces. But yeah, then the elderly population seems to prefer also to continue living in the larger spaces.
So even if it was working well to shift apartments, it's not trend breaking. It's rather helping here and there a little bit.
Yeah, I'm afraid so. Mm-hmm.
Aiste, did you have some more questions?
I guess one quick one. There was a question about we have, okay. So there was a question about the concept of sufficiency that's being brought up into the debate quite a lot in the context of the green transition. What role does it play when we discuss housing and housing shortages? How we could bring in this concept when we discuss housing problem?
Yeah. Yeah, so yeah, I think I'm not familiar with all of the connotations of this norm of sufficiency, but with regard to housing, it's probably questioning a little bit how much housing is actually needed, right? On how many square meters, for instance, are you happy? What is the norm that should be followed here? And I mean, when the first housing laws started, then so overcrowding in Berlin, for instance, in 1900 was defined as not having more than 6 persons per room, right? With regard to that benchmark, right, we are really living in that affordability revolution stage where we have on average up to 40 square meters nowadays per person. These are cultural norms which can also be redefined. They can be redefined by the stickiness of the housing stock. If you have only a certain housing stock, for instance, of these typical Soviet apartments, then this automatically reduces the number of square meters you live in, with residents in formerly socialist countries living on average on below 30 square meters per person, for instance. And I think much of it is due to the fact that there's just this heritage of a Soviet housing stock with these 55 sort of square meter apartments that have been built back in the day. So, I mean, housing is a very sticky, long product. Most of the buildings that are constructed now may last for a century. And I think, I mean, urban planners, architects should take this into account also, that this has these very long run effects.
Wonderful. I'm afraid we're coming to an end. It would be very interesting to continue this, and I really enjoyed this. And thank you, Sebastian, for the intervention. Thanks for answering all these questions and going through the different topics. And thanks for everybody else here for attending the SIG event. Big thanks to Frank Siebern, Thomas, and his team for putting this up and bringing this initiative. And thanks to Eiste and all the other people involved in the background. And we hope to see you at the next event on the risks of digital technology in public administration with Professor Karen Young. Please register. The link should be in the chat. And we will send you everything, the PowerPoint and summary to the list. Thanks again, Sebastian. And
thank you.
Wish you a nice day, everybody, and see you at the next event.